This is the Windward Tax Internal Sales Tax, Sales Use Tax Process Improvements webinar, and we will be beginning at 2 p.m. We will begin the Windward Tax Sales Tax webinar in 1 minute. Hello everyone, and thank you for joining us. I'm Mary Albright, and on behalf of Windward Tax, I want to welcome you to today's webinar. And for the next 45 minutes, we will be discussing internal sales tax processes that can help, that you can use to help increase your profits and reduce your risk. Now, before we begin, I just want to remind you of two things. First, we will have the webinar slides and audio available to you very soon, and we will get you an email when you'll be able to access that information. Second, we encourage you to submit questions throughout the webinar. We're going to do our best to answer as many questions as we can today. If we don't get to your questions, please know that we will contact you after the webinar to give you information, and of course, you can always get in touch with us. Now I'd like to introduce to you our sales tax experts who will be sharing their wealth of knowledge and experience with you today. First, please welcome Lauren Stenson. Lauren has more than 20 years of experience working exclusively in the sales tax field. Lauren is founder and president of Windward Tax, a full-service sales tax firm that works with companies throughout the country. She is a certified member of the Institute for Professionals in Taxation, and Lauren is a member of the Georgia Manufacturers Association Tax Committee. Needless to say, Lauren is well respected within the sales tax community, and we're delighted to have her here with us. Welcome, Lauren.
Thanks. Good afternoon, everyone.
And also joining us today is Dave Smith. Dave has more than 30 years of experience as a sales tax auditor and manager with the Georgia Department of Revenue. Dave has not only performed countless sales tax audits, but he has supervised dozens of state auditors and worked with a variety of companies. Today, Dave is the State Tax Advisor for Windward Tax. We're delighted to have you here today, Dave.
Thank you, Mary. Good afternoon, everyone.
All right, let's get started. We have a lot to cover. Today we're going to be talking about all the kinds of headaches your company may be facing when it comes to sales tax compliance. We're going to offer you ways to fine-tune your processes and to bolster your bottom line. So, Lauren, why don't we begin, and you can tell us how we're going to tackle this subject.
Sure, thanks, Mary. Today our mission is to go over the 4 basic areas of sales tax compliance that, for most companies, either creates liabilities in a sales tax audit or becomes a drain on profits because of missed exemptions or inefficient operations. And most of you participating today are in a position to affect change within your own organization. So we'd like for you to keep the following questions in mind as we're going through kind of what we're calling the 4 corners of sales tax. First is, how well are we handling this issue, and where can we improve? Where is our risk or exposure, and where are we missing tax savings? And finally, where are we just being inefficient? We're going to touch on a lot of areas that companies struggle with, and we hope we can give you guidance to make some improvements at your own company. Some topics may be a light bulb moment for you, an area that you never even considered before, and they might have sales tax ramifications for your company. And we hope that in the next 45 minutes we'll give you lots of food for thought, and equally important, a guide to affect change within your own organization so you can save money and reduce your risk.
All right, thanks, Lauren. Now, Dave, why don't you take the first area and let's talk about some of the problems with sales tax collections.
Sure, Mary. To start with, I'd like to emphasize that all the things we talk about today can be managed and improved. It's really easy to get into a rut with our business practices, and we all know that. When it comes to actual sales tax and that piece of the puzzle, there are 3 things to keep in mind. First is nexus, then taxing the right things, and then the problems with exemption certificates. Today we're going to talk about some of the ways you can manage those things a bit better. So let's start right away with nexus. The question is, in terms of sales or use tax, are you registered in all the states where you have nexus? States are getting more and more creative in their definitions of whether you have a presence or nexus in their state, so not being registered can be a costly mistake. Here are just a couple of things to keep in mind. First, watch out for agents working on your behalf, like salesmen or subcontractors. These can usually cause nexus for you. Do you keep inventory at non-company locations, like your customer's location, a centralized warehouse, or even at Amazon's warehouses if you sell goods through their fulfillment programs? Then be aware of the click-through nexus issue, where other companies or bloggers get paid to post links on their website and direct traffic to your website. States are calling this nexus as well. And the last thing, just to mention it, is to be alert to affiliate nexus if you have services provided by some kind of affiliated company. All of these things can cause you some nexus problems. Lauren, what do you suggest that people do to improve in this area?
Well, this is where your tax department really needs to get involved with every facet of your company to see what's being done. And you need to ask, what is operations doing? And where do you have inventory stored, or are you going to customer locations for quality control checks? And you need to also speak with marketing and sales. Where are the salespeople traveling? Where are you going to trade shows? And what's happening on the internet? All these could have nexus implications. And most importantly, you really need to talk to HR to see if you have remote workers. And believe me, you don't want to be finding out from the Department of Revenue that you've had an employee working remotely, let's say in California, without your knowledge. By getting involved in understanding all the operations within your company, you can mitigate a lot of risk when it comes to nexus. And an important thing to remember is one of the best investments you can make is to have a nexus study done on a regular basis. Just by knowing what triggers nexus and keeping a watchful eye on your business operations can save you thousands of dollars of tax, penalty, and interest, and really all the headaches that come with that. And then going one step further, if you find out that you've had Nexus and you haven't been registered, and don't go it alone. Seek professional help to guide you through a voluntary disclosure process to minimize the damage.
All right, Lauren, I'm going to jump in here for a minute. We're getting a lot of good questions, and this may be a good time to answer a question about Nexus. Kim wants to know, what should I do with a Nexus questionnaire that I get? Who wants to answer that?
I'll start off with that one, at least for part of it. I think one of the things you need to know is once you get a Nexus questionnaire, it's too late to do a volunteer disclosure. The state has already discovered that you're probably in their state, and there's not much you can do except to get professional help in going forward with what to do in particular in your certain situation. Lauren, what do you tell people?
You really, at the time you get a Nexus questionnaire, you need to fill it out completely and accurately. But it's probably a sign that it is the time to look at all your business operations, because if one state is contacting you, you have Nexus. There's a good chance that you could have Nexus in other states as well.
All right, I just want to point out too that Windward Tax did do a very good 45-minute Nexus webinar in April that goes into a lot more detail about Nexus. So if you have any concerns or questions, please go to the Windward Tax website at windwardtax.com and go to the resources tab, and you can see those slides and listen to that webinar. All right, so Dave, what other problems come up with sales tax collection in general?
Well, the second problem a lot of businesses face with sales tax is just taxing the wrong items. Taxability is an ever-changing topic. States are busy granting exemptions to this industry or that industry in order to attract them to their state. Not having the right tax codes on your invoicing system usually causes you to fall into, say, one of two camps. One, you're taxing the things that shouldn't be taxed, and that hurts your customers, and they might be wondering why you're taxing them and your competitors not.
Let me interject with a good case in point here. We once worked with a client that was charging tax on exempt services, which unfortunately resulted in many of their customers getting charged too much sales tax. So to fix this, they went through a long process of filing amended returns in order to refund their customers, which then triggered countless audits. So, lesson learned the hard way, and make sure you know the taxability of your product.
Right, and on the other side of the coin is that you may not be taxing the things that should be taxed. Then you run into a problem under audit where you owe tax that you haven't collected. There's not much worse than finding out that you should have been collecting tax and you haven't done so. Then you wind up having to pay the tax out of your own pocket, plus penalties and interest. Lauren, how do you fix that kind of situation?
Well, the piece of advice that I want to give to everyone is really to know your product. This may sound easy, but as your company starts to grow, your sales and use tax obligations could change. First, you're selling widgets. Then you offer widget repair and installation, and then widget warranties. Next thing you know, you're shipping widgets on your own truck and on common carrier, and then you're starting to drop ship widgets. Then you start leasing widgets. And finally, you start selling electronically downloadable widgets in all 50 states. So congratulations, you become king of the widgets, but you've also created a lot of sales tax challenges in the process. So when it comes to taxing, the right things or the wrong things, the best piece of advice I can give you is to really do your research, do your due diligence. Make sure that you are certain that you're taxing all the products and services that are taxable, and those that are not taxable, not charging tax. And routine checkups, they're really the key to keeping sales and use tax obligation in check and not creating any unnecessary problems.
All right, thanks, Lauren. Now, Dave, what's the next problem area people face with sales tax collection?
Well, the third area we'd like to talk about that complicates sales and use tax is the exemptions of your customers. Most states require a certificate of sorts that says either the product or the company is exempt from sales and use tax. The main thing is you have to have a documented reason to not charge someone sales tax, otherwise you should be collecting it. Part of the problem is that every state has its own peculiar way of handling some industries. And then the problems just compound. Like we said before, when you don't charge tax when you should, then you have to pay it out of your own pocket. The problems come when there's confusion over who's going to collect or even maintain those exemption certificates from your customers.
A good case in point is, we worked with a client and they put a very high emphasis on exemption certificate collection and made sure to collect new ones from new customers and get, new ones every year. However, what they failed to do is check the validity of each exemption certificate. And oftentimes the certificates they did get were for the incorrect state or were actually invalid.
Right. Sometimes it might be hard for a company to actually know if they're in compliance or not. Lauren, what do you tell your clients?
Well, it might seem obvious, but the first thing really is just to have a process in place. So here's what I suggest. First, assign the task to a particular department or person and get them trained to be able to identify and validate appropriate certificates. You'd be surprised at the number of clients that we have or companies that we talk to that have customer service or salespeople responsible for that function. And I don't know that salespeople really have ever had any training on what's a valid or invalid certificate. They just collect the paper that they're told to collect. Second, you need to decide how the exemption certificates are going to be stored so that they can be found and updated easily. Big brown folders are fine if you only have a couple hundred, but if you have thousands, you really need a more sophisticated method for easy retrieval. And the third step is really set up a regular schedule. We recommend an annual schedule to review exemption certificates and see what needs updating, collecting. Do your customers have name changes, or do you need additional certificates for new ship-to locations? And then finally do some testing to see how well you're doing. If your sample shows that you're 90% compliant, you're in good shape. However, if your sample testing shows that you're 40% compliant, you probably need to work on this area. But it really all boils down to preventative measures. Get your procedures established, documented, and keep them in check.
All right, those are 3 good suggestions. Thanks, Lauren. I just want to take a moment now to address another question we've received. Mark is asking, how long do we need to keep exemption certificates?
I'll take that one as well. The question on exemption certificates, there are a couple of things you need to keep in mind. First, you need to keep those exemption certificates as long as the statute of limitations is for your state. In most states, that's going to be at least 3 years. But the thing to keep in mind is even if a company is now closed that you have done business with, keep that certificate all the same because a tax auditor is going to ask for it.
Okay, now what about the purchases your own business makes? Let's shift to the purchasing area and look at what businesses face from that side of the fence. Lauren, why don't you kick off the next section with the problems companies face with their own purchases?
Sure. When we start looking at the purchasing corner of the world, we see companies face 3 major areas that can lead to hot water if not properly managed. The first is managing exemptions. There are a lot of great exemptions out there to encourage businesses, but they really need to be managed. And I've spent a lot of time working with companies who really don't have a handle on this process. They're either wasting exemptions and paying tax when they don't need to, or they're taking far too liberal of exemptions and getting hit hard under audit. And this leads into having a good use tax accrual system and staying on top of tax laws and changes and trends. And then we also wanted to address P-cards because that's a growing area that we see a lot of companies struggle with. In the process of managing sales and use tax when paying everything by P-card or credit card. So moving on to managing exemptions, like I said, there's a great number of exemptions that are available to different industries and growing businesses. However, those exemptions don't just happen themselves. You need to create a process where you've set up the procedures to take full advantage of them. And equally important, not be too liberal with the exemptions where you wind up not having paid enough tax. And most companies fall into two different camps. The first being a people process of determining taxability, and the second, a system or technology solution.
Hey, Lauren, why don't you address it a bit more about what you mean by the people process?
Well, when I talk about the people process, it's where people are actually making the decision as to whether or not something is taxable and then paying the tax accordingly, as opposed to a system process where tax decisions are made by a predetermined coding or logic based on material codes or account numbers. But let's talk about the people process first. In a common scenario, an invoice comes in and AP decides whether or not to pay the tax. And remember, for most companies, taxability is determined by how something is used, not necessarily what it is. And in most cases, whoever is making the purchases knows exactly that. So, we feel that in order to manage your exemptions to the fullest, it's really a good procedure or good practice to train your purchasing department on the tax laws, because they're the ones that know whether or not something qualifies for exemption. Then when an invoice comes in, AP can pay the tax according to purchasing's recommendation. Tax can be paid either directly to the vendor or paid as use tax. And each transaction is analyzed on a case-by-case basis, and good tax decisions can be made.
So, Lauren, how is that different from a system process?
Well, in this case, a system is set up to make all the use tax decisions. And this can be very cost-effective if you have a lot of transactions. However, it's not an easy task to get the tax decision logic set up or set up correctly. And we call that tax logic, we call it mapping. And what has to happen is that each type of transaction gets mapped to a particular tax decision. So where we see companies get into trouble is that the mapping doesn't cover complex transactions. For example, where there are materials and labors on one invoice, it's really important to separate out the transaction to make sure it gets mapped correctly. Same thing with invoices where they're both taxable and exempt items, making sure that it gets coded and mapped correctly. And the biggest recommendation we can give is to check your mapping and train your personnel and check the results to actual purchases. And keep repeating the process every so often.
Oh, what about the business of training your personnel for a system process? What do they need to be doing?
Well, you'd think that would be counterintuitive. You have a system, you don't need to train your people. But unfortunately, we've seen countless times where people have chosen the wrong material codes or account numbers, innocently enough, without their knowledge that their decision is having an effect on tax calculations. For example, one time we had a manufacturing client whose maintenance department was the one choosing material codes. They didn't know that there were different tax applications for general supplies versus manufacturing supplies. So by not training them on the impact of what they were doing and the importance of their selection, they wound up paying nearly $250,000 of tax in error. But this is just a great example of how technology can go astray, and we're going to talk about that in a little while.
Yeah, that's a good example, or maybe I should say a bad example, of how a company didn't take the steps necessary to manage those exemptions. So I guess what we're saying is, depending on how your company makes tax decisions, either by people or systems, in either case it's essential to manage that process. Otherwise you're running the risk of missing exemptions and paying tax when you don't need to, or the other way around, paying tax when you not paying tax when you should.
All right, so not only do you need to have the right procedures in place, but you need to make sure that they're implemented properly. This is a good place. Let's take another question. We're getting a lot of good questions in. Debbie is asking, are freight and delivery charges taxable?
Well, I'll take a stab at that. That's the age-old question that everybody seems to ask. And the truth is that it really depends on the particular state and the facts behind it. So in this case, what we'd like to do, really, the best thing is to maybe answer that question offline, because so much depends on the particulars of her situation. So we'll handle that separately a bit later.
All right, so we'll We'll get back to you, Debbie, on that. And we talked about managing exemptions, but the flip side of that also comes into play, doesn't it? What if you are purchasing something that's taxable, but your vendor doesn't charge tax? That's where use tax comes into play. What problems do you see with use tax accrual systems?
Well, during the time I was doing sales tax audits for the state, a lot of times the problem was that people just didn't address the issue at all. Many companies, when companies don't charge you sales tax, it's not exactly like a get-out-of-jail-free card. Like we mentioned before, for a lot of companies, like manufacturers, the number one thing a sales tax auditor looks at isn't sales so much, although that's important, but use tax. So be sure you actually have some kind of method or system for accruing that use tax.
And Dave, I find in my consulting, use tax is probably the area that creates, the largest chance of being either overpaid or underpaid. So whether your system is, automated or manual, problems they do come up. For example, who decides if a purchase needs to have use tax paid? Is there one person on your staff that looks at all the purchases? And what happens if they're, out sick or, on vacation? Unfortunately, I have one client who, accidentally ran a report of fixed asset purchases for the month. Most of these purchases were actually exempt from tax. And unfortunately, they ran this report and they paid use tax on all those transactions simply because they ran the wrong report. Alarm bells didn't ring when they paid nearly $20,000 of use tax that month when they normally paid around $4,000. Another example is just the opposite. In the turnover of personnel, somehow use tax stopped getting remitted. Only under audits did this come to light, and it cost them over $100,000. And I can give you more and more examples of how use tax really creates a lot of problems for different companies. So, what can you recommend to, what advice can you give to companies to help from keep these problems from happening?
Well, one of the things you mentioned really hits the nail on the head. The question is, whose job is it to monitor use tax accrual? The main thing is to have somebody who's well-trained and, as we mentioned before, have a backup plan or a backup person ready to go. The example you gave of run-of-the-run report really points out that it's important to review the amount of use tax that you're paying each month. And look, is it higher or lower than the month before? You need to know what's reasonable and what's not. So paying attention to those kind of trends, you might say, can save you from some pretty nasty surprises. Another basic improvement is to simply review the individual transactions each month. Give the report a once-over to spot any large or unusual type transactions. I used to be surprised at the number of businesses that never looked at this, but it happened all the time. Then if you have an automated system, be sure you know how to modify it for tax law changes. Like the example of the maintenance crew before, even an automated system needs to be reviewed regularly for the right taxability as well as the right particular tax rate being applied.
All right, that's good advice, Dave. It sounds like there's a lot to keep up with. Lauren, what kind of problems do people face with just keeping up with sales tax changes?
Well, that is a huge problem. And one of the examples that I like to use is, remember the game of telephone when you were a kid where one person starts by whispering the phrase in the next person's ear and it goes down the line and at the end, the final phrase is nothing like the original? Well, when I'm consulting with clients, sometimes I feel like that's kind of the same situation I hear over and over again. I'll ask someone, well, why are you handling this a certain way? And their answer is simply, well, Jimmy said to do it that way, or that's the way it's always been done. And unfortunately, there's a lot of cases where good information gets lost in translation. And the person making tax decisions or filling out tax returns has never been the person actually trained. And mistakes can happen, big mistakes. So then you're not only having to keep on top of laws that haven't changed, but you also need to keep abreast of laws that are changing and different ways each state handles the taxability of purchases. And this is the challenging part. Minor changes in tax law don't make headlines, but they could have a big impact on your organization, for the good or for the bad. Once we had a client that was basing their use tax decisions on a previous audit that they had undergone several years earlier. Unfortunately, they didn't realize that right after their audit, there was an important court case which had a favorable impact on many of their purchases. And this resulted in thousands of dollars of overpayments. So, Dave, what other advice can you give to help companies make process improvements on staying current?
Well, Lauren, you know this as well as anyone. The truth is, one person just can't keep up with all of it. Having a resource that's working with you to keep you up to date on all the sales tax changes that affect your business is really the best way to stay on top of things. One question you need to ask yourself is, have I trained my purchasing staff on the taxability of the items we buy? Taxability changes all the time, we've said it before, but that's where having some sales tax professionals handy can save you time and money. So some basic training is a great way to start, but where you'll get the biggest bang for your buck is in customized training that's specifically geared for your company, your purchases, and the way you do things. Process reviews, we talk about those from time to time. That's a great next step. These reviews take a critical eye and make sure that you really understand why you're doing what you're doing at the very detailed level, while at the same time keeping an eye on the big picture.
All right, thanks, Dave. Now, Lauren, while we're talking about purchasing, what kind of problems come up with P-cards?
P-cards. Sales tax auditors love auditing companies that use P-cards. Why? Because it's usually easy money for the auditor. And because most companies don't have a process or a system in place to pay use tax on transactions that are purchased with a P-card. Unfortunately, I've seen companies that don't have good procedures really fall into two different camps. First, you have someone that decides every transaction needs use tax, and they start accruing tax on services and restaurant charges and travel expenses and other exempt items. And then I see people that decide that no use tax ever needs to be paid, and they are underpaid on office supplies and marketing supplies, furniture and equipment, and sometimes very expensive IT equipment and software. So there's definitely problems that companies face with P-cards. So, Dave, what do you recommend?
Well, you said it exactly. Sales tax auditors love P-cards because there's usually a lot of money there. And Lauren, we've talked about it before, and it bears repeating, that often the best place to start with a process improvement is to have a good procedure in place. I've known a lot of auditors, if they simply see that a good procedure is in place, they'll skip auditing the rest of the P-card purchases altogether. But if your company uses P-cards, you need to keep a couple of things in mind. First, each transaction needs to be examined to determine if it was taxable and if the tax was paid at the time of purchase. You really need to look at that supporting invoice itself to find that out. Then keep all the invoices that document your P-card transactions, not just to determine whether tax was paid, but you'll need that for that audit that's going to come your way. Then decide who's going to review the transactions for use tax requirements. It's one of those things where if it's everybody's job, it's nobody's job. And it's less important who does it than to be sure that they're trained and doing that job. There really isn't a best answer, I suppose, as to who should do it, but you need to put some kind of procedures in place and then train the people who are doing it.
All right, well, that's great advice for a company to improve their processes on purchasing. Let's now move on to audits.
Sure, Mary, I'll take that part to start off with anyway. For most businesses, sales tax audits are going to happen, and you will be audited. For some companies, it's not that frequent, but for others, it's like clockwork. As soon as one audit's finished, another one starts.
So under the corner of audits, there's a few pieces of information that we do want to share with you today, and we're going to focus on four main areas. First is advanced planning and things to do before an audit even begins. The second is some battlefield techniques, or how to minimize your assessments. And third, Of course, you and your auditor will not always see eye to eye, and it's not surprising because sales tax is full of many areas, many shades of gray areas. So we're going to talk about the cost of agreeing to disagree. And then finally, we're going to talk about what to do after the audit is done in a post-audit recap. So Dave, why don't you get us started by sharing how to be best as prepared as possible for an audit before an audit even begins?
Well, it's important to be prepared. The main thing is to start off with is to do some planning before you get that phone call or that letter from the auditor. That'll save you money. One of the things you need to do, for example, is put together an internal team of accounting, purchasing, and operations folks to do a self-inventory of your policies and procedures. We keep talking about this once a year review, but here's where it can really pay off. You want to know what an auditor would find before you even let them in the door.
What we like to do with our clients is our equivalent to an annual checkup. We work with them to identify any changes within their organization. We do a yearly nexus review to see if anything has changed that requires additional registrations. We look at any recent tax law changes, rulings, or court cases that could have an impact on their business. We also look at their accounting and purchasing staff, and do they need a refresher training seminar because it's been a while, or have they had turnover? Then we actually do some testing of their sales tax processes. We make sure that they are taking advantage of all the exemptions available, as well as paying tax where they should. We check to see if sales tax returns reconcile to the taxes that's been collected, and look at their exemption certificate compliance. Basically, what we're trying to establish is a clean bill of health, that everything's being done as it should, and there are no skeletons in the closet. And if money's being wasted by doing things inefficiently or paying tax when it's not due, we help fix that. It's that age-old saying that an ounce of prevention is worth a pound of cure.
And that's what's a great thing to look at outsourcing. Sometimes just another set of eyes brings light to new issues that you've not seen before. And I can tell you without fail from my years of auditing that taxpayers that had help in this area and were proactive and stayed on top of things, their audits were always easier on the taxpayer side.
All right, Dave, what problems do people face while the audit is actually going on?
Something that happens all the time is that business people make their case worse than it might otherwise be. The first thing we suggest now is that you gather your team together, like we mentioned on the advanced planning part, and develop some strategies to address potential scenarios from the audit. If you've not already, it's not too late to get that outside help we talked about. When you decide on the sampling block, for example, be aware of when your best practices have been. The actual period is normally negotiable between you and the auditor. Pick one that's best for you.
In most states, the auditor will not tell you about the overpayments they see. It's up to you to present your findings to be included in the audit. So if you've ever considered having a reverse audit done, now's the time to do it. You're working with a sales and use tax firm. They usually do reverse audits on a contingency basis where the fee is determined by a percentage of the refunds or credits. In this case, with an open audit, it's definitely a win-win situation for the taxpayer.
Yeah, and there's a reason we call these battlefield techniques, because it is something you need to be aware of. For example, don't offer the auditor irrelevant information. Try not to give the auditor more information than they've actually requested. And don't give them information for periods outside the audit period. It's really important for you to establish that there's one point of contact for the auditor when they come in your door, rather than let the auditor speak with everybody in the building. They might unknowingly give misleading information that will cause that auditor to go down an unnecessary path and prevent you from getting a speedy audit all wrapped up and done.
Well, then once you've been given a preliminary report from the auditor, now it's time to have someone from your team ready to research and potentially challenge the audit. Sometimes this is as simple as making sure there's no duplications or entry errors made by the auditor. You'd be shocked at the number of assessments that I've reduced just by finding typos from the auditor. You also need to review the list to see where other problems exist. For example, are there some items that are considered taxable by the auditor that are actually exempt based on how you use them? Maybe just further documentation is all the auditor needs.
And don't forget, pay close attention to the deadlines. Once work papers have been sent, the clock starts ticking. But don't let that ticking clock stop you from requesting more time to do your own due diligence. Chances are your auditor has taken months to get to this point anyway. A reasonable request beyond the 30 or 60 days they may give you would certainly be appropriate for you to take the time to review their audit findings.
All right, well, I'm going to jump in here. It's not going to surprise anybody. We're getting a lot of questions about audits. So let's take a question now. Matt wants to know, what happens if you disagree with the audit?
Well, once you get your final work papers, then it's time to decide whether not that you would agree or disagree, but whether you're going to do something about it. Sometimes taxpayers are just so relieved to have the whole thing wrapped up that they just want to cut a check and move on, and I understand that. But that can be a mistake. It might be best to move on, but there are times to appeal. Like the old song says, you've got to know when to hold them, know when to fold them. Making the wrong decision either way can cost you not only now, but in the future. Lauren, what do you suggest people consider when they're making that decision to appeal or not to appeal?
Well, you're absolutely right. The wrong decision can cost you. So here's a few pieces of advice. First, consider the size of the battle. If it's a small assessment, sometimes it's just more cost-effective to agree to disagree, take the hit, and then get back to business. Other times, if it's a large assessment, it might be worth going up the chain of command to see if you can get a better result. The first level supervisor above the auditor, they're usually motivated to close the audit, and they can negotiate. And also you need to ask yourself, is this going to create a future precedent? Even though the dollars in this audit may be small, agreeing to something in this audit could set future precedent for future audits. And it really it's much harder to convince an auditor that something should be not taxable next time when you've agreed to its taxability this time.
And no matter what, that's why I recommend seeking out some guidance from a sales tax pro. It could save you a lot of time and aggravation knowing ahead of time that another taxpayer fought the same battle and either won or lost. A knowledgeable resource can give you additional information that will help your case. There might be a pending court case somebody else has filed on the same items right now.
Another good recommendation is to speak to other tax professionals in your same industry. You might find that they've already walked the same path and you can learn from their experiences.
All right, Lauren, now once the audit is over, what should you do from there? What kind of process improvements can you make now?
Well, this is a really good opportunity to reevaluate your processes. So the first recommendation that I have is document your audit. If you've compromised on some issues, have that documentation ready so it's available for the next audit. Then look to see where you need to make process improvements. Were the items that you were assessed tax on, were they isolated transactions, or were they really a sign of trending problems? And if an assessment came from purchases, is it time to do some training for your staff or make changes to your technology solutions? If you're like most companies, chances are there is some tweaking that will need to be done. So no one likes to go to their boss and say, hey, we just had to pay a $100,000 audit. But what minimizes the impact of the current audit, and more importantly, your next audit, is when you go to your boss and say, hey, we just had to pay $100,000 on this audit, but I've done X, Y, and Z to improve our processes and our compliance, so we have better results next time.
All right, well, that makes sense. Now, let's go ahead and move on to the last section of the webinar, technology and outsourcing. That's something everyone's talking about. Lauren, why don't you take us on the first part of this topic and talk about what problems people face with technology?
Well, nowadays there's a lot of great technology out there to help companies manage the sales and use tax process. Whether it's a cloud-based system for downloading rates into your ERP system or uploading data files for sales tax return filings, There's also software to help manage exemption certificates, and even software that will help make use tax calculations. But an important first step is to know, before you incorporate technology into your process, is to know, all the different things you can do to keep it from going astray.
Yeah, one of the first things to do if you're considering software is to take a look at your transactions. If your business handles thousands of different transactions every month, technology is probably a good choice. You should also analyze your sales tax practices. Where are you weak? Where are you strong? Where have there been problems in past audits? And what processes are taking a lot of time from your staff?
And then you should educate yourself about what solutions are out there to help you. I mentioned there's a lot of new software and technology, but sometimes they can come at a high cost and maybe overkill for what you need. So really look at all your options, and sometimes we find that just with some training and internal procedures that get monitored produce a better result than technology solutions.
Yeah, and you'll get your best advice from somebody other than the software salesperson, more than likely.
All right, now if a company's taken that leap to use technology, what are some of the process improvement suggestions you have to offer?
Well, one of the more common problems we see with companies is when they start to rely too heavily on technology to handle all their sales and use tax processes that they really forget that it needs to be managed. Companies get lured into a false sense of security that once it's all been set up, everything is just good to go. And then the problems come when they take their eyes off the ball. And some people start coding things to wrong material codes or account numbers, and sales tax compliance goes astray, and you can find yourself in a black hole. So Dave, what do you recommend for companies to help keep technology from being a problem rather than a solution?
Well, Lauren, we know, and most of our listeners know and participants know, that it's a fact of life that any system you install will only be as good as the people who run it and the information it's given. We all remember that old saying, garbage in, garbage out? Well, it's true with sales tax software as well. When you incorporate technology into your sales tax processes, it does still have to be managed, like you said. Further, though, I'd say it needs to be tested and the people need to be trained. So what we continue to recommend is that once a year, not every day, but once a year, do some testing of all your technology processes. Make sure your systems are calculating the right rate of tax on the right items. And make sure that use tax decisions are being calculated in accordance with what's on the invoice. This may sound like a simple and obvious recommendation, but we see companies ignore this step and wind up with large liabilities or large overpayments all the time.
All right, now I know we're reaching our time quota, but Lauren, why don't you finish up this section by talking about outsourcing?
Well, Mary, Dave and I have both spent a lot of time working with companies and handling and helping with their sales tax challenges. And we both feel that if a company puts some effort into developing good internal processes and good internal controls, it will really keep a lot of problems at bay. But we know it's a huge challenge to keep up with everything, and sometimes help is needed because time and resources are limited. And that's when it's good to look for outside help.
And when we talk about these annual process reviews, and they are a great way to keep all your processes in check, you need to find somebody to do this with you who has the time, experience, and expertise to help you. Look for somebody you feel comfortable with, who will walk beside you, and not just come in, do a job, and go home. Taking the time once a year or so to work with a professional to look at the aspects of your business will help you keep things in line. If problems exist, they can be quickly remedied before they turn into real headaches. Gaps in compliance can be fixed before they turn into large assessments and drain your bottom line. And on the other side, any areas of overpayments or inefficient processes can be fixed as well to improve the bottom line.
Good outside help should be able to provide training for you and your staff that's up to date and fits your particular business. It's a very low-cost way to keep everything running smoothly, especially if you've had large turnover. And also having a resource available to bounce questions off of or provide you with quick research is always a great idea.
And I can tell you that Googling tax questions or calling 1-800-NO-CUSTOMER-SERVICE at your local DOR will get you iffy results at best. You want a sales tax professional that knows your business that can be a resource for you when you have those questions, and we'll be working with you on a proactive basis, not just after the fact.
And I just wanted to conclude by saying that we at Windward Tax, we're here to help you. Sales and use tax consulting is what we do day in and day out. And we've been fortunate to work with thousands of great clients over the years, helping them improve their own sales tax challenges. And we love doing it. So if you feel that your organization could use some help, we'd love to speak with you and share our ideas on how we can help your company improve your process to reduce your risk and improve profit.
All right, well, thank you, Lauren and Dave. We've certainly covered a lot of information, and hopefully we've answered some of your questions. Speaking of questions, we have a lot of good questions coming in, and unfortunately we've gone a little over our time mark, so we're not going to be able to answer all those questions here, but we will get back to you with answers, and certainly if you have any questions, please contact Lauren, and she will help you. Lauren, what's the best way to reach you?
Well, the best way to reach me is emailing me. My email is lstinson@windwardtax.com. You can also call me at 770-696-4145, and I'm at extension 212. And also I encourage everyone to visit our website, windwardtax.com. We've got a lot of great information on there. And also please subscribe to our newsletter. We send out a newsletter that has all sorts of tips and tricks and tax advice to help you out.
All right, and once again, thank you, Lauren and Dave, for this fact-filled webinar, and we want to thank all of you for spending the last 45 minutes or so with us. I just once again want to quickly remind you that the slides and audio of the webinar will be available to all participants very soon. So within the next week or so, you'll be receiving an email with all the details. And don't forget to contact Lauren if you have questions. Thanks again, and have a great rest of your day.
So long, everyone.
Thanks, everyone.